This is our top 5 gainers and top 5 losers analysis for April 1, 2019, Monday. So today I'm going to talk about Maxis, TMW, DD, MWC, SOC. For the top 5 losers, I'll be discussing PXP, TEL, ISM, PHA, and Chelsea. That's letter C, the stack code. Let's begin with Maxis. Maxis closed today at 14.34. It broke out above the resistance at 13.90, and that makes the previous resistance as the current support. The previous support was 11.84. So the latest resistance, since the previous resistance has already been broken out, the current resistance is now positioned near 17.54. We can actually cite this midterm resistance somewhere here. That's 16 pesos per share. That's the midterm resistance as a precursor to 17.54. Okay, let me repeat that. The current support is at 13.9. Major resistance is at 17.54, but there is a midterm resistance at 16.0. The ascent in price on Monday came with the green volume that's almost 100% above the 10-day volume average. However, the foreign investors' buying appetite wasn't that high since they only registered 256,000 pesos worth of net foreign buying. Nonetheless, the 2019 year-to-date foreign investor sentiment is bearish. MACD remains bullish. It maintains its bullish trajectory above the signal line, especially above the zero line as well. Historical volatility is still at 42% or 43%, and that gives Maxis a low risk level. I just want to emphasize this RSI, although I don't frequently tag along RSI in my discussions. Note that RSI is already about almost 2 points away from reaching the classical overbought level at 80%. Realize this as well, that this is the first time since the third week of May last year. Again, this is the first time since the third week of May last year that the price of Maxis managed to break out above the resistance at 13.90. So understand that there is still a possibility for the price to go back below the current support at 13.9. I am citing that possibility because the current price is still not that far. It's still not that far from 13.9. Okay, so that's why my bullish conviction isn't that high yet, since it has just newly broken out above the previous resistance at 13.90, which is now acting as the immediate support. Okay, so my recommendation is it's either you strictly follow your trailing stop loss and only sell once it's hit, or you sell a few tranches near 14.30, near 14 to 14.30. Secure your profits. Maybe you sell a few tranches, one or two tranches, then keep a few shares. You keep the remaining shares so that they can still benefit should Maxis continue its ascent towards the midterm resistance at 16 pesos per share. So that's my recommendation, and my overall sentiment is neutral to bullish on Maxis. Again, there's the word neutral because my conviction isn't that high yet, since the price has just newly broken out above the previous resistance at 13.90. But I remain bullish as well. It's neutral to bullish because the ascent in price, the piercing above the previous resistance at 13.90 was supported by a huge volume above the 10-day volume average. Besides, the alignment of the moving averages is still in a perfect bullish direction. The shorter term moving averages are above the longer term ones. Okay, now let's move on to DMW. Okay, I did not say BMW. Okay, that's DMW. DMW closed at 12.06 on Monday. It also broke out above the previous resistance at 11.80, and that one is now acting as the immediate support. So the psychological resistance, I said psychological because it's no longer historical. It's now moving at its all-time high. Okay, so let's plot the Fibonacci so we could get the psychological resistance of for DMW. And then for us to be able to drag the chart to the bottom, we have to zoom it in first. If you're not going to zoom it in, then the chart is not draggable. So here you go. The psychological resistance is pegged at 13.64. 13.64. That's 61.8% of the Fibonacci extension. That's the golden ratio. 61.8%. That's your resistance. Psychological resistance again is at 13.64. Immediate support is at 11.80. The ascent in price, this green candlestick on Monday, came with another green volume that's more than 100% above the 10-day volume average. That's bullish. Nonetheless, foreign investors only registered nearly $500,000 worth of net foreign buying, but for 2019 year to date, they remain as net buyers. Okay. MACD remains its bullish direction above the signal line and of course above the zero line. RSI is already about 9% away from hitting the classical overbought level. Now historical volatility is already pegged at 46%, which gives DMW a low risk level. My recommendation is that you consider locking in some profits of a few shares, maybe one or two tranches also, near 12 pesos, 12 pesos to 12.50. Consider locking in some profits. Anyway, if the ascendant price continues and we see volume that comes along with the ascendant price, then you can always use the amount that came from the shares, the first few shares that you have sold, to buy new shares. So it's better safe than sorry. Okay. Now, that's my recommendation. Now, for those who don't have a position on DMW and are thinking whether they should enter a new position or not, this is my recommendation. Take note of these two criteria. Consider the idea of entering a new position if and only if these two conditions are present. Number one, the price, okay, there should be, the volume should be equal or above the 10-day volume average. Okay, the previous days or the current day's volume or the previous day's volume should be equal or above the 10-day volume average. Number two, the most traded range and the most voluminous range, the range that has the biggest volume and the highest number of trades must be registered, parked, or printed closer to the intraday high than the intraday low. So those two conditions must be present. Why is condition number two important? Condition number one is already familiar to you by now, supposedly. Now, for condition number two, why is it important for the range that got the biggest volume and the highest number of trades to be closer to the intraday high than the intraday low? When that happens, it means to say that there's still an appetite for the buyers to continue buying at a higher price. Because if the range that got the biggest volume and the highest number of trades is parked closer to the intraday low than the intraday high, then meaning to say it seems that the buying sentiment or buying force has seemed to have reached the exhaustion level already. Okay, I hope that makes sense. So there you go for my overall sentiment and recommendations for DMW. I remain bullish on DMW with some reservations or some appetite to lock in some profits near 12 to 12.50. 12 to 12.50. Moving on to Double Dragon. Double Dragon closed on Monday at 23.5. Okay, let me remove the background color. I don't like the background color for the Fibonacci. Now for Double Dragon, it closed at let me remove this. We don't need the Fibonacci here. Let me plot the other support and resistance levels first. Okay, here you go. Double Dragon closed at 23.50 on Monday. It's now closer to its immediate resistance at 23.88 than to its immediate support at 20.15. The alignment of the moving averages is still not in a perfect bullish position since the 200-day SMA is still hovering the 50-day SMA. Nonetheless, the price is already moving above the 10-day simple moving average. Last Monday's green candlestick came with a green volume that's about 50% above its 10-day volume average. Meanwhile, MACD remains bullish above the signal line. It's about to, or not about, because it's already moving above the zero line as well. Historical volatility is still at 40%. That gives Double Dragon a low risk level. RSI is still far from the classical overbought level. That gives more room for Double Dragon to try higher prices, preferably closer to the resistance at 23.88. Now, foreign investors bought about 7 million pesos worth of net worth of Double Dragon shares yesterday. The 2019 year-to-date foreign investor sentiment remains bullish. My recommendation for Double Dragon is, my overall sentiment is bullish on Double Dragon, and my recommendation is to respect your trailing stop loss, sell once it gets hit. If you would like to enter a new position on Double Dragon, please take note of those two conditions that I mentioned when I was discussing DMW. First, volume should be equal, if not more, higher than the 10-day volume average. Number two, the range that got the biggest volume and the highest number of trades must be registered closer to the intraday high than the intraday low. If you don't know where to look on your broker's data, you can always use the private clients forum to request for our latest price volume distribution analysis. And I'm going to post my chart, my most traded and most voluminous charts, the price volume distribution table for Double Dragon or any stock you'd like to. And you can find our private clients forum. By the way, I have simplified the labels of the tabs. Now you can find the quick start guide on your My Account tab. The short-term trade setups or videos are in the short-term trading tab. Our investment guide for long-term investing, where we apply our smart index investing strategy, is now found inside the long-term investing tab. Now for the private clients forum, which was previously labeled as discussion, is now labeled private clients forum, and everything is in here. I'd like to segue as well the newest feature in our private clients forum, which is the study room. This is where you can test your skills and technical analysis. At the end of the day, I'm going to give a score for those who will post their analysis for whatever topic is currently available. And then I'm going to vote for the best technical analysis as well. This is an opportunity for you to learn how to trade independently and apply what you have been learning from me or from us in general. Now for the extras, this one contains the previous newsletters and some helpful videos. Okay, so there you go. My overall sentiment for Double Dragon is bullish, and I've given you my recommendation. Again, if you would like to know the latest price volume distribution and analysis of Equalist Analytics, please use the private clients forum to request for that matter. Okay, now moving on to MWC. MWC closed on Monday at 23.90. The support is near 22.70. Resistance is now near 25 pesos per share. Meanwhile, the current price of MWC is still moving below the 10-day simple moving average, and the alignment of the moving averages is far from being a perfect bullish alignment, obviously. Okay, the green, it's been 2 days that MWC has been registering green candlesticks. If this continues, then those who bought near 22.70 may have already hit the psychological bottom of MWC. Okay. Last Monday's green candlestick came with a green volume that's a few volume points away from being equal to the 10-day volume average. Nonetheless, I would consider that as a bullish volume since above 50% of the 10-day volume average. Okay, I did not say 50% above, but 10%. Let me correct myself. It's above 50% of the 10-day volume average. Okay. Foreign investors sold about 17 million pesos worth of shares yesterday or on Monday. The 2019 year-to-date net foreign sentiment is, let's check, it's bearish, net foreign selling. MACD meanwhile is still in a bullish formation, or not bullish but bearish formation, but I'm seeing that MACD is poised to change direction from going to the south, now going to the northward direction, although it's not that dominant yet or not obvious yet, but it's somehow it has shown us a change in its direction. And hopefully, if this ascent in price continues, then we might see MACD forming a bullish convergence with the signal line. Okay. RSI, meanwhile, if you have noticed here, RSI already hit the classical oversold territory last March 28. That was Thursday. Now, after hitting that oversold territory, we've seen that it has bounced away. It has been bouncing away from that psychological bottom for the past 2 trading days, last Friday and Monday. On the other hand, MWC also has a 47% historical volatility score, and that means a low risk level for MWC. My overall sentiment on MWC is bullish. Okay, bullish, but I would suggest consider locking in some profits once it hits 25 pesos per share, just to guarantee your profits, especially if you enter a new position near the psychological bottom at 22.70. If you don't like to if you don't like to lock in some profits once it hits 25 pesos, then make sure that you know where your trailing stop loss is. Keep on doing an upward adjustment on your TSL, trailing stop loss, every time MWC hits a higher price than where it is at the moment, than its prevailing price. Okay. If you'd like to know if you should enter a new position on MWC, take note of those two conditions that I mentioned a while back: volume and the position of the most traded and most voluminous range. Now let's go to SOC. In the past few days, SOC appeared in our top losers list. Now it managed to register a green candlestick on Monday as it closed at 1.20 per share. Resistance is near 1.42, or you can make that 1.4. Support, on the other hand, is close to 0.73. You can make that 0.70 if you'd like to round it down. Now there's an midterm support as well, positioned near 1.05. So apparently, SOC respected the midterm support at near 1.05 last Thursday and Friday, and it managed to bounce away from 1.05, which led to it closing at 1.20 per share. Volume, meanwhile, was I think it's equal. It's a few points lower, a few points away from being equal to the 10-day volume average of SOC. It's not worth it to factor in the foreign investors' participation on SOC since it's an insignificant amount. Okay, now MACD is still busy moving above the signal line, also above the zero line, and that's a bullish signal. Historical volatility is at 316%. What do you expect from a stock that went up from 0.7 to 1.42? That's 100% change in price in less than 1 week. What do you expect? Of course, you would see a high volatility score. So that makes SOC an extremely high risk stock as far as our historical volatility is concerned. Now, my overall sentiment on SOC is Neutral to bullish. There's a possibility for SOC to just keep on trading the range between 1.05 to 1.42. 1.05 to 1.42. So if you would like to trade SOC, I think it's more proper to just do the trade the range method or trade the range strategy, meaning to say you will just trade it for as long as the price is between 1.05 and 1.42. Okay? So if you would like to enter a new position in SOC, make sure that those two conditions are present. The volume should be equal or above the 10-day volume average, and the most traded and most voluminous range should be registered nearer or closer to the intraday high than the intraday low. Okay, so that's it for our top 5 gainers today. Let's now move on to our top 5 losers, starting with PXP. PXP closed on Monday at 9.96. Okay, at 9.96 per share. It almost closed below the dip support at 9.84. So apparently it respected the support at 9.84. Yeah. Okay. Now let's take a look at Edge. Let's see if a dividend caused this dip in price. No dividend. So meaning to say, what happened to PXP on Monday was an organic movement of the price per share. It wasn't caused by any dividend announcement or anything related to that. Now, the support at 9.84 was respected. Volume, the green candlestick came with the strong bullish volume. That's obviously above the 10-day volume average. However, foreign investors did not have it. In fact, they sold about 3 million pesos worth of net foreign selling. And the 2019 year-to-date foreign investor sentiment is bearish. That's net foreign selling. MACD, last Monday's green candlestick wasn't enough for us to see MACD to change its direction. Its direction. It's still pointing to the southward direction. So it remains in a bullish trend. Okay, meanwhile, RSI has already pierced or broken down below the classical oversold territory. Okay, historical volatility is still at 120%. That gives PXP an extremely high risk level. Okay, my recommendation is that you can do a test buy near 9.96 to 10 pesos per share, provided that condition number one has already been met. Okay. Condition number 2, that's the only thing that you need to monitor now. Is the most voluminous range, the most voluminous and most traded range closer to the intraday high than the intraday low? If the answer is a yes, then you can do a test buy. Not at any price. Take note, not at any price, but within that range that you've spotted. Range that got the biggest volume and the highest number of trades. That's where you need to park your buying price. Okay. If you would like to know my latest price volume distribution analysis, please post in our private clients forum. I'm going to post my chart there. Okay, now next we have PLDT. PLDT closed at 1,105 pesos per share on Monday. Support remains at 1,027. Resistance is at 1,127.5. Let's make that 1,128. The red candlestick broke down below the previous support, which is now acting as the resistance, which is 1127 or 1128. And that red candlestick came with a bearish volume that's almost equal to its 10-day volume average. I mean to say, there's still an appetite for. I can still feel the selling pressure on PLDT because of this volume. Foreign investors were not happy on PLDT. It seems that their target support level for their top up wasn't met, since they were not their presence wasn't felt yesterday. They registered 1 million pesos worth of net foreign selling yesterday. It's a diminishing participation from the foreign investors actually for PLDT. if you can see it here. If you're going to review its net foreign trade histogram. 2019 is a bearish. Foreign investors have a bearish sentiment for PLDT for 2019 year to date. MACD remains bearish. In fact, it has already crossed below the signal line. That's a death cross. That's not the kind of cross that we would like to see. Okay. Now, historical volatility is at 37%, and that is a low risk level for PLDT, but not because it still has a low risk level, it doesn't mean you're going to buy it right away, or it doesn't mean you're going to buy it now. Okay. My recommendation for PLDT is, or my overall sentiment for PLDT is bearish, and my recommendation is that you should not trade the stock yet. Wait for the price to break down closer to 1027 per share. 1027 per share. Okay, give me a few seconds as I charge the laptop. Okay. Now, again, my recommendation is wait for a pullback closer to 1027. Don't hurry just yet. If you'd like to, you can add TEL in your watch list, but don't trade it just yet. For those who have PLDT, make sure that you respect your trailing stop loss. And if you don't have one, make sure that you calculate it immediately. And how do you calculate your trailing stop loss if it's only now? If you're calculating it at late calculation, how should you do it? Here's how you should do it. If your average price or average cost is higher than the prevailing price of PLDT, you calculate your trailing stop loss from your average price. For example, if your tolerable risk when it comes to trading is 5%, you calculate 5% below your average price, and that's where you should sell once the price hits that level. On the other hand, if your average price is lower than the prevailing price of the stock of PLDT, you calculate your trailing stop loss from the prevailing price, meaning to say you get 5% below the current price of PLDT, and that's where you should sell once that price gets hit. Okay? But next time, I do hope you should not buy any stock without calculating your trailing stop loss first. Okay? In fact, you should already know your exit strategy even before you add a stock in your portfolio. Okay, that's my recommendation, analysis, and overall sentiment for PLDT. Moving on to ISM. ISM closed at 4.81 on Monday. Support is at 3.61. Resistance is now at 5.21. It broke down below the previous support. 5.20 is its previous support, and it's now acting as its current resistance. That red candlestick came with a strong volume above the 10-day volume average. Meanwhile, foreign investors sold nearly 10 million pesos worth of shares on Monday. MACD remains bearish. I don't see any formation of any bullish convergence with the signal line yet. Historical volatility is at 54%, and that makes ISM a moderate risk stock. My overall sentiment on ISM given this volume is bearish. So that's my overall sentiment, and my recommendation is wait for the price to touch the position of the 200-day SMA, which is near 4.38, 4.3 to 4.4. Once ISM's price hits 4.3 to 4.4, please take a look at the volume or the color of the candlestick. If we see a green candlestick once it enters 4.3 to 4.4, then we can consider or entertain the idea of doing a test buy if those two conditions are present. And what are those two conditions? I'm going to repeat. Volume should be equal or above the 10-day volume average. Number two, the most traded and most voluminous range must be closer to the intraday high than the intraday low. And of course, the candlestick should be green. When those three things, when those two conditions, and if the color of the candlestick is green, then it's then logical, it's data driven to do a test buy within the range that got the biggest volume and the highest number of trades. However, if those two conditions are not present, even when ISM hits 4.3 to 4.4, then we have to adjust our waiting position near 3.6, the support. Okay, now let's move on to PHA. PHA closed on Monday at 0.91, support is at 0.86, resistance is at 1.18. The descent in price came with huge volume, relatively huge volume, since it's above its 10-day volume average. MACD remains bearish. There's nothing that's worthy to be cited on the foreign investors' participation, since they only register an insignificant amount every day. Historical volatility is at 90%. That gives PHA a high risk level. My overall sentiment is bearish on PHA. My recommendation is wait for the price to touch 0.8 to 0.86. Okay. While there's a possibility for the price to bounce away once it enters the 0.8 to 0.86 territory, I would still advise that you check on the volume and the price volume distribution. Again and again, entertain the idea of doing a test buy if the color of the candlestick is green, if volume is equal or above the 10-day volume average, and lastly, if the most voluminous and most traded range is closer to the intraday high than the intraday low. If those conditions are not all present, then you postpone the idea of doing a test buy and let the stock do its thing. And usually, its thing is to continue moving to the bottom. Okay, keep observing. Lastly, we have Chelsea. Okay, so Chelsea closed on Monday at 5.30. Let me plot this immediate support and resistance levels first. Give me a few seconds here. Okay, immediate support is at 4.57. Immediate resistance is near 6.09. Volume, the red candlestick on Monday came with a volume above its 10-day volume average. That's bearish. Foreign investors also sold about 5 million pesos worth of shares. MACD has already registered a death cross, meaning to say it has crossed below, not above, below the signal line. RSI is already poised to touch the classical oversold territory once again. Historical volatility is at 43%. That still gives Chelsea a low risk level. So, given these, my overall sentiment remains bearish on Chelsea, and my recommendation is that you wait for a pullback closer to 4.57 or 4.6 to round it up. But it doesn't mean you should automatically buy once the price hits 4.5 to 4.6. You have to reevaluate, do a price volume distribution analysis, and what are the three conditions that you should see for your plan to do a test buy to become data driven and logical. First, the candlestick should be green. Number 2, volume should be either equal or above the 10-day volume average. Number 3, the most voluminous and most traded range should be closer to the intraday high than the intraday low. If those three conditions are present, then you can do a data-driven decision to do a test buy on Chelsea. Otherwise, postpone the plan and continue being on a watch, wait and see mode. Be on the sidelines. Okay? So there you go, team. You've heard my technical analysis, recommendations, and overall sentiment for Maxis, DMW, Double Dragon, MWC, SOC, PXP, PLDT, ISM, PHA, and Chelsea for April 1, 2019, Monday. So I would like to remind you, by the way, to take advantage of the newly added feature in our private clients forum, which we call Study Room. Poster analysis. Every day I will try to post a new topic, a stock that we can where I can allow you to post your analysis, and then I'm going to give you a score, and then I will vote for the best technical analysis, for the most comprehensive technical analysis at the end of the day. This is an opportunity for you to practice what you've been learning, okay, so you can really trade independently. Okay, so lastly, I would like to mention the availability of our seminars, of my seminars, in our seminars page on our website, www.equilis.com/seminars. I have an upcoming seminar in Makati. It's going to be, seats are very limited because I prefer conducting workshops in small groups, about 30 people, on May 4, 2019 in Makati City. The seats are very limited, 30 people only. So I'll be talking about my evergreen strategy to trade the stock market on your own. On your own, okay? Not forever tied up to me, okay? And then on, excuse me, on May 18, I will have the same topic in Pampanga, okay? And then in June 1, that will be in Cebu. June 22 in Davao. July 6, that will be in Baguio. July 20, that will be in Cavite. Iloilo on August 3. And my team is yet to post all of the seminars for the entire 2019. So I'm really fully packed, fully loaded for the rest of the year. Until the rest of the year. Until the end of 2019. So there you go. There's a 500 peso discount for the current subscribers. Take advantage of that discount and better hurry in registering and buying your ticket because seats are very limited. Otherwise, I do not know when will the batch 2 for the Manila event will be because of my fully loaded schedule until December 2019. So there you go. Again, my name is JC De Guzman of Equilist Analytics. Have a disciplined and a profitable trading day this Tuesday. Bye for now.